Before the Facebook IPO, Mazian Lasfer, Professor of Finance at Cass Business School, was the first person in my hearing to doubt that the IPO was going to be a massive success. And, well, wasn't he right? Just look at this chart. The Facebook IPO has underperformed the main Dow Jones index by 52%. If you compare it to Google, another major technology IPO, it's down by 120%. An absolute disaster. Mazian Lasfer is back with me now, and he has come up with the 6 definitive reasons as to why the Facebook IPO has failed. And the first one, Mazian, investor sentiment.
Yes, indeed. What happened here is that it's really something that is strange. Usually what we find is that IPOs, they start overperforming in the beginning, and it's only about 6 months later that they start decreasing. But for Facebook, it's kind of strange. Why is it underperforming since the beginning of the IPO? One reason could be that the company came to the market very, very highly overvalued because of the investor, what we refer to as the investor sentiment. And the investor sentiment means that it is more behavioral, the behavioral issues that are driving the pricing of Facebook, in the sense that everyone wants just to buy the Facebook because it is fashionable, it is a kind of well-known, etc. Unfortunately for us, this argument is very difficult to test because we don't have enough data about the psychology of investors. So although it might remain a possibility, we don't think that it is the full story.
Yes, this is investors almost acting like the users of Facebook, acting like teenagers, and that's related to your reason number 2, and that's investor trading.
Yes, that is another possible reason, in the sense that we notice kind of an unusual trading in Facebook, which we also notice for other IPOs. So for example, if we compare the trading of Facebook relative to the Google that we used to compare earlier the Facebook performance after the IPO, we find that it's relatively similar. Now, there is nothing that is unusual. Obviously, if we compare it to the trading now of Google, then we can see that Facebook is trading heavily. But if we look at this blue line here, which indicate to us really the Facebook volume of trade, average volume of trade per day, and this lighter blue line here, which is Google, at the time of the IPO, are you just starting comparing like with like, i.e. the first 70 days of the IPO, then we can notice that they are highly volatile, which is normal. However, for Facebook, what the strange thing that we noticed is the fact that there is so much kind of short sellers. There are many people that are selling those shares, knowing that probably there will be kind of negative information that is coming up from Facebook. So the short sellers may be overtaking the heavily traded, maybe driving the heavy trading in Facebook shares.
The third reason, and that you've identified, is the decrease in price of other stock market IPOs.
Oh yes, that is kind of strange because I mean, my favorite team is really Manchester United. It came recently to the market in August 2012 at $14. Now it is trading only at $12. It's quite a substantial fall, and I'm crying now because they do very well in the market, in the pitch, but not in the market. So overall, we notice really that many IPOs have been doing very badly, because it might be just this period that is very specific, in the sense that we don't have really so many IPOs coming to the market, and therefore the market is a bit nervous with the financial crisis, etc. So that might mean that indicate to us really that overall US IPOs, for example, this year went down by 9%. In China, they went down 12%. However, there are still IPOs that did very well. I mean, if you look at LinkedIn, which can be directly comparable to Facebook, LinkedIn has doubled in price over the last period after its IPO. So the question still remains as to why Facebook really didn't perform like those good IPOs rather than the bad IPOs.
Reason number 4, and it's public enemy number 1. I sort of jest, but you say the effect of investment banks.
Oh yes, that's another reason probably why IPO has been underperforming. There are two main reasons for the role of the investment bank. The first one is that we notice probably that the investment banks are getting relatively weak because of the financial crisis, and therefore when you bring your company as an IPO, it's a kind of bargaining power between you as the entrepreneur and the investment bank who is going to market the company. So for you, you want the highest price possible. However, the investment bank is taking the risk, and therefore they would like the price to be much lower. As a result, because of this kind of financial crisis, we might think that maybe the investment banks really kind of are driving the companies into the Facebook into a lower price, or giving up to the entrepreneurs to have a higher price, to have their say. However, on the other hand, we can notice also that investment banks might have overvalued Facebook for a number of reasons. One of the reasons is that we noticed that, for example, the lead underwriter Morgan Stanley is in fact selling much more shares to the investors, because they see that the Facebook was going relatively at a higher price, so therefore they get what we call the gain in fees from the over-allotment. The second thing that is really controversial for Facebook is that while the lead underwriter is selling more shares, there are the other underwriters like Goldman Sachs, JP Morgan, that are shorting the stock. So really they borrow the stock from other investors who didn't have enough information, and then selling it in the market for the sole reason of decreasing. I mean, maybe they have some information that the price is going to decrease, so they can do it in easy way. Another reason relating to this is what we call flipping. Flipping is when you give those shares that are overvalued to only the best investors that you have, but knowing that the price is going to go down. So the higher the price, the higher the bubble that you create in the market, the more likely that you are going to get from this flipping strategy that is well documented in the academic literature.
The conspiracy theorists will like your reason number 5, and that is sales by major shareholders on lockup expiry.
Yes, in general, what happens in the IPOs is that there is an agreement between the underwriters and the major shareholders, in particular the managers, the owners of the company, so that they are not going to sell the shares. And what we did the research here at CAS, and we find that on average in the UK the lockup period is about 1 year, while in the US it's about 6 months. So therefore, there is in 6 months period after the IPO, many investors are allowed to sell their shares. And we notice really this fact kind of evidence, in the sense that we notice that the price has decreased 7% just on the 16th of August, when 271 million shares were sold by large investors. We noticed also that one of the major shareholders, called Peter Thiel, he sold 20 million shares, and immediately the price of Facebook declined to 18.75. So there is an impact of the selling by those insiders, large shareholders, after the lockup period. However, that doesn't really kind of cover the whole story, because it could be just a blip on the lockup expiry date, but then it doesn't explain why the price really went down well before the lockup expiry date. So it's still a puzzle that cannot be explained fully by the lockup expiry date.
And then other people have won Nobel Prizes in economics for your reason number 6, and that's asymmetric information.
Yes, that's really relates, the whole issue relates to the valuation of IPO, of Facebook IPO, in the sense that I mean, we are shy really to say that we cannot value those companies, because they are so difficult to value. There is so much information that other investors do not have. Whether you are an investment bank or whether you are a small investor, we do not have enough information. And that is really what we refer to as the information asymmetry that affects significantly the valuation method. Whatever valuation method that you can use, if you don't have the information, full information about the company, then all the valuation that you are doing will be wrong. And for the case of IPO in particular, this is we notice that it is a very high growth company, a very good company, but we don't know really how much is that growth. If we look at the valuation through time, even before the IPO, when Facebook was created, it was in 2005, it was only valued at $100 million, and then 1 year later, its price was multiplied by 10 to 1 billion. 4 years later, for the IPO, it was multiplied by 1,000. It became 104 billion. So the market is kind of uncertain as to the true value that we should put on this IPO. And given that we don't have enough information, we would expect high volatility in the stock price. And as I mentioned before the IPO, the Facebook is a very risky company. We don't have enough information about it, so we do not expect really its price now to stabilize. It's very likely to decline further up to roughly $10 per share.
$10 a share. That's the first time I've heard that, but then it was the first time I heard that the Facebook IPO might not be the success everyone was predicting when you came and spoke to us last time on Cash Talk. So we will stand by and watch your prediction. I hope you'll come back if and when it gets to $10 a share. Meze and Nasfer, thank you very much.